Well, the recent rally in stocks appears to have stalled. Those double-digit gains since the mid-February lows have taken a bit of a breather, and that shift in the market coincides with the winding down of the first quarter. It also comes against the backdrop of several major speeches by Federal Reserve officials this week and on Friday, the government's always important employment report. And, oh yeah, there are still those pesky headwinds bedeviling stocks. Oil prices, recession worries, political risks, and more. As Dominic Chu reports, the path forward for equities could be rocky.
Overall, the stock market's given people a roller coaster ride for the first few months of the year. And now that we're trying to close the books on the first quarter, we've seen a lot of different warning signs come up. Remember, markets got off to one of their worst starts in history for the U.S. stock market, and then have rebounded a lot since then. So let's take a look at some of the reasons why some traders and some investors are a little bit worried about what's going to happen in the coming months. Now, there are way too many to put on our wall behind us here, but I want to show you a few of them that are getting a lot of attention. First of all, on the currency side of things, it's not something we often talk about, but corporations will be talking about the strength of the U.S. dollar. That could be a big theme in earnings season. Remember, we're less than a month away from earnings season coming up. So the strong dollar, and remember, the strong dollar is important because for a lot of these multinational companies, it's a lot more expensive for them to bring profits back home when the dollar is strong. Something to keep an eye on. Also, with regard to the currency markets, the commodity markets are a big focus as well, specifically what's happening now with the price of oil. We've seen a sharp move higher off those lows, but now maybe a little bit of weakness creeping back in there. Oil prices and the energy complex were a huge drag on earnings and sales for S&P 500 companies in the past year. We'll see if that continues, perhaps a warning sign there. Then you've got the IPO market. Initial public offerings have not been active. There haven't been a whole bunch of them. Does that signal that perhaps there's not enough risk appetite, not enough of an environment conducive to bringing your company public? That could be a warning sign as well. Then you talk about the banks, the financial stocks. They're important because they're the second biggest sector in the S&P 500, and they've been one of the biggest laggards so far in the market. When the banks don't perform, there's a question about whether the whole market can, again, without the banks. And then one last one to consider, transportation stocks. You think shippers like UPS and FedEx, railroad companies, trucking companies, they move goods. So if we have seen a bit of a run there and weakness perhaps settling in for transportation stocks, maybe that could be a bad sign for the overall stock market and economies here. But again, just some warning signs to keep an eye on. Nobody really knows whether the market's going to head up or down, but they are watching very closely some of these factors to see if they could lead perhaps to some more caution down the line. For Nightly Business Report, I'm Dominic Chu.